Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, right into the analysis portion of this video we go. We're going to be looking at some possible trade setups. The markets today are neutral to higher. Yesterday, we had called for a neutral to lower day for yesterday. Today, we said it would be neutral to higher ahead of the president's speech. We are easily batting 100% here as we continue to nail the market. Now, again, many people thought we'd see more downside on Monday. Many people thought we'd see more upside on Tuesday ahead of the presidential speech. The key is to recognize the market as it continues to be into resistance, and that's what's keeping it neutral to positive. If there was no resistance here, you'd be off to the races, up $1.50 on the SPY, 10 plus points on the S&P 500, but there is resistance, and that's what's keeping it in that neutral to slight positive bias, with the spiders up 32 cents on the day. And again, 32 cents is the equivalent of literally 3 points on the S&P 500, so it really is a flattish type day. Markets actually had a nice little float up here into a little bit of minor resistance at the 152.30 level, and then pulled themselves right back to the 20 MA. Volume is dead, and again, volume is quiet because everyone's just waiting to hear from the president. In addition, China's closed. China New Year hit the other day, and they're closed all week long. So with all of that stuff kind of going on, it leaves the market in a quiet, kind of pensive situation. Now, a couple things that I do want to bring up that I think are interesting. Apple is taking a little bit of a hit today. Many people continue to wonder about, well, where is Apple going to be a buy? On an intraday basis, there was an amazing level today, guys. Look at this, gap fill right here on Apple. And right into the 200 as well, just above the 200. That was a level I gave the intraday stock chat. In addition, Nick's morning level gap levels are now being released in the intraday stock chat at 9:15 a.m. We're posting them up for every intraday stock chat member to view and trade off of. All right, now he'll continue to release some interesting information in those morning videos, giving you outlooks, giving you ideas, and so forth. But the trade levels are making people so much money, we had to make them just for members of the intraday stock chat. I mean, literally every day people are printing, $500 to $1,000 off his gap plays that are being mentioned there. And the intraday stock chat's only $200 a month. So I mean, imagine just even making $500 a day on those gap plays. It's incredible money. So again, just for members, and again, you can join the intraday stock chat. You can even take the 7-day free trial to get those gap levels every morning. It's a 7-day free trial to the intraday stock chat at InTheMoneyStocks.com. All right, so intraday Apple was a great level right there. The bounce occurred all the way back to the 20. That's what you would have expected. Apple actually, based on what we're seeing on the daily chart, could continue to fall. The interesting factor that you're watching for today, see the 20 MA here? See how we closed above it yesterday, and then we're trading really back exactly on it now? That's going to be what you're watching. If you close back below that level without confirmation to the upside, which is, any close below there today would be that would set a negative move in motion where Apple would eventually trade down to the 420, 423 level. If it can stay on or above the 20 moving average on the daily chart here on a closing basis today, then there's still open-ended nature to the upside where you could see a move on Apple up here. And again, notice the 50 MA and gap fill to the upside. So really you're watching Apple to find out where it's going to close, and then where it closes will dictate where it's going in the coming days. All right. Other stocks in motion today. BlackBerry continues its little bit of a sell-off. Google down about $1 as well on the day. A lot of stocks are kind of just hovering here. One stock that's having a good day is Chevron. CVX moving up. Made a little bit of a pivot high. Take a look at the daily chart here. This is what we're looking at. This short term is your target. I mean, again, it's up $1.10, so I doubt it goes up much more. But if the markets hold steady to what I think they will tomorrow, I actually have a neutral to slight upside bias for tomorrow as well. If they do hold up like that, then you would anticipate the Chevron chart going into the 117.30, 117.50 level by tomorrow, which is another 50, 70 cent move up from current levels. Okay, so that's an interesting little chart there. Taking a look at a couple other plays out there, let's take a look at JP Morgan Chase. JPM is having a nice day. Looks like a little bit of consolidation is attempting to break out. Not doing it on a time count, so I'm not too worried that this is going to continue up for much longer before a pullback. But nonetheless, it has to be respected that it is closing above that high and continuing to move. Based on this, you'd actually confirm above that level now, which in the short term is definitely on the bullish side. All right, you definitely look at that as being slightly bullish with confirmation. By the way, confirmation is a signal. It's proprietary, created here at themoneystocks.com, along with the T time counts we reveal to our members, as well as river theory, three-tail theory. Basically, everything Nick and I who run In the Money Stocks and our chief market strategist here, everything we trade off of is basically proprietary, aside from fib levels. We use fib levels and moving averages as well. But we don't use MACD, we don't use stochastics, RSI. All that is nonsense. To be honest, the average traders use that. And if you want to be average, then use it. But average traders lose money. Institutions steal their money. So you got to step up your game. And if you do step it up, then that's where you come into the proprietary methodology called the PPT methodology, where you start to really learn and prosper. And that's where you profit for life. All right. Couple other stocks out there that continue to do well. We have Goldman Sachs here. Goldman Sachs continues to move up. I have a key level on Goldman Sachs on this chart here. It's actually a little bit higher. So you actually ran into a small resistance here, but I actually think Goldman could go to this point, which is gap window at around 157.5. But ideally, if I'm going to short Goldman, I'm waiting for gap fill, guys. 160 Pierce. Even number Pierce, 160 Pierce. That is a fantastic level on Goldman Sachs. Still a ways away, though. Still $6 away. So question is, can the market continue to move up? Can Goldman continue to move up into that range? Amazing move up on Goldman from the lows just back in June, July. I mean, look at this area here. Goldman was trading at $90. So $90 stock back in June, July, which is basically just a little more than 6 months ago. And now the stock has basically almost doubled. Not quite, but you're talking about a 75% increase. Truly amazing. You don't see stocks that size go up that quickly, aside from Apple back in its heyday, a year ago or so, where it was just amazing on the upside. We talked about Apple down today. A couple other charts I want to take a look at. Let's take a look at Caterpillar today. Caterpillar is continuing to inch up. The interesting thing about Caterpillar, it's still forming an inside bar pattern here, so be alerted. This actually is a bearish setup that could be coming to fruition on Caterpillar. I will be keeping a very close watch on this chart. It may be an alert I put out to my members inside the Research Center. If you're a swing trader, that's where you want to be. If you're an investor, that's where you want to be, in the Research Center. The Research Center is geared towards swing traders and investors. We go into proprietary analysis. You get swing trade alert calls. You get market analysis. You get proprietary signals. You get daily videos and market reports. It's basically everything that would make you an expert trader. And again, we'll teach you all that proprietary information, all right? So I encourage you to join up. And this Caterpillar is on my watch list for a possible trade on the short side. It's not ready yet. I want to make that clear. It's not ready yet. It may end up not being ready ever, but if the time count aligns, essentially the proprietary signals are price pattern and time. If you have price pattern and time aligning, it's a no-brainer 90% success rate trade. And again, there's no hedge fund out there doing 90%. That's the beauty of what we do here. So anyways, keep that in mind, and we'll continue to analyze and trade. IBM, I think, is an interesting chart here. It's also making bearish consolidation off of the drop down. IBM has to be a worry. If you're a bull, if you're a Dow Jones theory bull, even though that's not really the Dow Jones theory, but this is the biggest component of the Dow Jones. If you are a bull out there, you have to be concerned with the way IBM's trading. All right, also Apple today, but more so IBM over the last week or two. IBM had earnings. The stock pops up on earnings and rips up. Caught all the shorts off guard there and just killed them all. Now, as soon as earnings were over, the stock basically just starts to fall. And this is while the market's been going up, which I think is very disconcerting if you're looking at the overall market and looking for strength. All right, why is IBM falling? Even today, I mean, the markets are up a little bit. IBM's basically flat, and IBM's come back off the dead lows. Even when the market was flat earlier, IBM was getting crushed. Didn't quite get to a double bottom, but, I mean, this is not a good chart. I mean, look at this chart. I mean, from earnings over here, and this is while the market's gone like that. Not healthy at all. So it does get my attention when you see the biggest component of the Dow Jones Industrial Average trading like that. All right, guys. So that's just a little tidbit I want to mention here. Small caps continue to do awesomely well. I gave out a new small cap alert yesterday inside of the Research Center as well. If you're a Research Center member, you got that. We also made a nice call on Valero VLO. VLO, this is a great one. As you can see, I even traded it beautifully here as well, and continue to see some good action there. But nonetheless, Beautiful drop on Valero. Yesterday, I gave it to the Research Center as a topping tail. See the topping tail? See the max move off the 20? Max move calculations are another proprietary technique we utilize here, folks. So you have a max move off the 20. You have a topping tail, an extended chart. Also, multiple other factors here. This told me it was going to fall. Guess what? This morning, I shorted it myself. Many members did as well, and it's coming in. I mean, so the profits continue to mount here. The beauty of it, what we do here is just, I'm neither a bull nor a bear. I don't care if the market goes up or down. I just want to find these chart setups and play them. And again, we just swing trade them. You pull them for a couple days, 2, 3, 4 days, a week, 2 weeks sometimes, and you make money. Okay, so again, 7-day free trial here to the Research Center, 7-day free trial to the Intraday Stock Chat. Just sign up, just start looking at what we give out in there, and you will catch on. And it is an amazing life to start to be able to see every move coming in the charts, to be able to call this week so far perfectly. 2 days into this week, 2 days nailed exactly on what the market's done, literally to the penny, basically. And to be able to do that is an amazing thing, and it's really, we'll teach it to anyone. So, again, come join us here at InTheMoneyStocks.com. Profit for life. We will see you soon.